The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Tuesday's market action, it was a good follow-through day in the cattle markets. Hogs were a little bit higher as well, so livestock was pretty good. We did find pressure in the soy complex, though, while corn and wheat held up relatively firm on the day Tuesday. So what's exactly going on here? Feels very quiet. We're going to try to work through some things, though, and talk risk management and more today on the show. Joining us for a conversation, Jacob Burks with agmarket.net. Jacob, good to talk with you, buddy. Thanks for joining us. And, I gave a couple of wins there on the day Tuesday. Overall, though, markets are kind of quiet right now here mid-April, aren't they?
I think there was a lot of anticipation and maybe some fingers crossed going through the weekend that we're going to get some volatility with just some unknown news. I mean, anytime you talk about major conflicts overseas, that how's that going to affect the crude oil? How's that going to affect our economic stance, geopolitical problems, all this good stuff? And I think there was a little angst coming into the week, and then all of a sudden it's been just kind of a dud. And whether you're looking at higher price movement, lower price movement, there just hasn't been a whole lot. The beans have taken a pretty good shot here for several different reasons. But I think the strength that you've seen for wheat and corn to be resilient in the midst of that, I think does give you a little bit of optimism.
Well, and thinking about that too, let's focus on the soybeans a little bit here. 40-day lows in beans. I think a 1 month low in bean oil, near it on Tuesday. We're getting good rain in the Corn Belt. We're getting some severe weather too, but I wonder if maybe some of that rain was part of the problem in the soy complex, plus that strong NOPA crush number we got Monday. I mean, I talk about some of those things. Were those some of the factors you think kind of led to this soy complex breaking a bit here Tuesday?
Yeah, I think if we don't see problems domestically with production, we're not going to get much of a bounce period. And I think that all leads into the fact that yes, we had record NOPA crush numbers, but that eventually led into the fact that, hang on, what are we going to do from here forward in crush whenever you see Argentina having basically a double crop what they had last year? And I think that even though we saw the record crush, I think it's the anticipation of, can we meet that 185 million ton number to put us where the USDA has us for what we should be crushing? The answer is probably yes. We probably can reach that number, probably will reach that number, but that means we have ample supplies. And what does that do for price? And what does, how's that going to look on that crush number unless the soybeans come down? So those are the things that we have to look at from the soybean. Look at the byproducts there. Look at the complex. I mean, it's not strong at all. I think it was like you said, a month low. I think it was 6 week lows in the oil. And you're hearing about all this expansion. You're seeing this expansion come on. You're talking about a lot of it coming on this month actually. And they didn't build those plants to leave them idle. So you need some renewable diesel demand in a very strong way, or you're going to need to see some production, some planting scares at least.
I'm going to hypothesize here a little bit, and I'll see what you think about this, Jacob.
Let's do it. Let's play a game.
Yeah, let's play a game here. Has corn found its value? As I feel like corn holding firm here in this window makes me feel like that, barring something crazy, we maybe found our value point for corn here in the short term. What do you think?
Well, man, that's I appreciate you putting me on the spot here to answer that question, because that's good. That's a good thought. I mean, you typically look at, okay, how are end users coming in to buy the corn here? Has this been a big buy? And I think you found several different times throughout this pullback that you have seen that. You've seen commercials, end users come in and say, hey, depending on how they've hedged their self or what their usage is does this number work? And unfortunately, I don't know that from the O crop standpoint, I don't know that that's the fact. They're not actually aggressively coming out to buy that. I don't know that we don't have to come down a little bit more. Sometimes a falling market shakes more corn loose for them to have the availability to buy. We're seeing strong basis, but nothing that's going to that's out there running, chasing some of that corn that's locked up in the bin right now, especially in this May timeframe. So I think that can happen. And if that starts to happen, then I think you're probably right. We did find that plateau, that level that corn can be at safely.
Okay. All right. Well, I appreciate you taking that question from me, Jacob. I got to make this conversation interesting to some degree here today.
I get. I'm over my new stage now. I'm into the real stuff, right? So.
Let's talk wheat. Kansas City wheat held positive. I guess another thing I'll kind of throw with that conversation here is, can wheat be our upside leader maybe in these markets potentially? I mean, what's your thoughts on this whole wheat complex right now, Jacob?
Can they? Yeah, I mean, because the right now they're the only thing that really has a trending chart that looks decent. So that's what their job is right now. I mean, you've seen strong exports all year long out of the soft red. We've struggled in the hard red wheat, which we only had a decent growing season last year. We ticked lower 1 point in the good to excellent category on Monday, mostly because of some of the dryness that we've seen over in the plains area. But really, that's we're going to blame this 2 cent higher day on that. I don't know. I think that you're going to have to see some type of fear. I mean, we'll kill the wheat crop once or twice to get some type of a bounce. But I think that we can find some stability in that. Right now, the wheat market is what is being stable. Now we've beat that up so hard so fast throughout the year. That maybe that wheat market's kind of finding its value right now as well.
All right. Risk management wise, a lot of guys getting busy in the field. I know the rain's probably going to slow them down here for a couple of days, but in the grand scheme of things, with all the geopolitical risk out there and more, we talk about this a lot, Jacob, but risk management wise, this isn't a time to get complacent. Don't hang the phone up and ignore it. You're going to be busy, but also you got to keep your thumb on what's going on in these markets on the grain side, right?
Yeah, and you don't be complacent, but hopefully we've got enough stuff in place that we don't have to overtrade this, right? So the fact that we're going through this seasonal time where we can have some upward ticks, and like I said, I was talking before about old crop is while you're out there planting, you're not delivering corn. You're not delivering beans. So do we see some type of uptick in basis? Do the processors need to come out and buy and get a little bit more aggressive? So from that standpoint, yeah, you don't want to stay complacent at all. You want to keep your ear to the ground. Place orders ahead of these times, so that way if something does spark or something does happen, you have that in place. Hopefully, you have some downside risk management in place already. If you don't, you're still looking at a 467 new crop price right now. Okay, not the end of the world. Something that you can look at short term and look at some of these short term, short dated options. What it was short dated means is you're using the December futures price, but you're shortening up the time period. So therefore, it decreases the cost of what you have in place. I think some of those strategies right there will get you through planting. I think it'll allow you to push the time frame out long enough to where we're going to see, hey, you can get with an August option, you can get past that June 30th planting date. What actually did we get in the ground? What has happened with the South American crop? Did they get the safrinha crop planted well enough? So I guess that would be my main focus. If you don't have those floors in place, use some of these short-term options at least to get that in there to give you just some comfort while you're planting.
Another thought too, with all the geopolitical concerns out there and crude oil prices ticking up, diesel prices ticking up here as well. I mean, if I need to get some more energy needs taken care of and get it on farm storage here to get through planting season, feels like that might be something to consider here as well.
Yeah,
just with the way things are right now, Jacob.
Well, as we were going through the planting, we saw an upward tick. Crude oil has been in a stronger rally. I have not been overly aggressive getting that future needs done. Now, when you start seeing some type of potential problem with when you start saying Iran and you start saying some of those Middle East countries that do produce a significant amount of oil, we know what's been happening in Russia. So some of those major oil producing countries, if there's some sanctions or if there's some problems that we look there, I think it'd be very important for you, even though we're producing quite a bit of crude oil domestically. It might not be a bad idea to go ahead and lock in that every need that you're going to have, so you don't have that surprise. A couple of weeks from now, whenever they really push this thing higher, and all of a sudden it's hitting you in the pocketbook because we didn't get it done. So I would say go ahead and lock in your needs through summer.
We are talking with Jacob Burks from agmarket.net here today on the show. Jacob, let's talk livestock. Again, a good day there on Tuesday. We got some positive things to talk about. Cattle, I was hoping, praying we'd get some follow-through strength on Tuesday from what we got on Monday, and we did. We got it. Good triple-digit gains. Talk to me about this cattle complex. Do you feel like we've maybe got some new technical support underneath this here after all this volatility?
Yeah, you're going to end up closing here today above last week's highs. You have that U-shaped formation where we found a little bit of stability. We're closing above the 10-day moving average. You definitely have that technical support. The charts look very, very happy now. It's even got a little smile on it at the bottom. So I think that's something that we can hang our hat on. I think the one thing that you focus on, like in that live cattle, what happened as we took that last dip. And as that market was decreasing, as the market's prices were going down, you saw open interest coming up. So there were new shorts coming into the marketplace. And so now as we've started to rally and we had 2 days in a row of positive trade, I think that was a good sign of when these new shorts that came into the market thought, okay, that's enough. We know there's not a lot of cattle out there. We got a cattle on feed coming up on Friday. Maybe this is a good time to take some of our profits, step to the sidelines. And I really believe that's what we saw today with that upward tick.
Well, and two, with this cattle market, a lot of this volatility surrounding the news cycle with HPAI and dairy cattle and consumer worries seemed like that really is what drove a lot of this volatility recently, because there's a disconnect with what's going on in the countryside. I mean, cash trade has still been strong, out there in the sale barns and whatnot. It feels like a lot of the problem has been the psychological effect on the futures markets here in cattle, Jacob.
Yeah, it's so we've talked a little bit about that. I think last time I talked to you regarding the fact that you have higher weights, you have lower kills, but yet our cash price was really staying there. I mean, a lot of the lower kills number it has as a result of the lack of lean meat that we have in our freezer. All those the cows that we have not killed this year versus last year. But you've had those lower kills. You've had the higher weights on these cattle. But that was kind of a mind-boggling thing of what was taking place there. So there were some things weighing on this market, and then all of a sudden cash did break here at the end of last week. I would say that type of setup, along with some demand fears such as war, such as the lack of disposable income as the inflation continues to rally, those type of fears right there, if that's not enough at these levels, that I would say more than likely are at a very profitable level for most of the people that are owning the cattle, especially the cow-calf guys. Those type of numbers, those type of ideas are a really good reason why you should be looking at getting some type of risk management, especially after a couple of days like this. I would say that you definitely want to take these moves like this and not get complacent. This is where complacency would not be your friend.
Hog trade too found a little bit of support on Tuesday. I know the pork cutout was down over $4 at midday. That something that I'll watch going into Wednesday, but overall feels like hog futures are finding some footing again here. What's your thoughts on the hog market right now?
I think the hog market was totally technically traded here the last couple of days. A lot of the same reasons why we saw the cattle market is hey, this could be an opportunity to just take our profits. And the guys that got into the short position, we had came down here, tested the 50-day moving average in the hogs, had a good recovery off of it yesterday and some follow through today. It's just it's a good sign. The strength that was here in the hog market, I don't think has really left. I think something like you said, the cutout, the cash price has come down. The dollar going up like it has probably been the biggest weight on top of the hog market. I mean, we depend and have become very reliant on these exports that have been going out, and we really need that to stem the continued upward tick in the hog market.
Well, good stuff, Jacob. Let's wrap up our conversation today. Anything final? I look across a lot of the rest of the markets. Outside markets quiet. Cotton under heavy pressure Tuesday. Gold higher again. Dollar higher. There's things going on, but overall fairly quiet market day. I guess wrap this up for us. Anything final you want to share or reiterate with folks?
If I could put a message out there to all these fund, these fund investors, whenever you're wanting to go ahead and use the commodity market as a interest as a inflationary hedge, would you mind going ahead and coming back and over to the corn and beans? That would really help us out a little bit, because you got cocoa, you got everything else being really, really strong. But it's kind of flown out of the ags and into some of these other softs and into some of these other metals and stuff like that. I do feel like if this continued inflation talk, if we see a month where we're talking more interest rate hikes, that could be something else that helps us as we see managed money come back into the grains, into the livestock to continue that inflationary hedge. So that's something that you kind of hope for, right? You don't plan for, you hope for that, and I think that as you plan, there's a lot of different things that you can do in stagnant markets, and there's a lot of strategies that can add some value. Now we talk the difference between hedging your product and then having some strategies that are value add. It's sometimes they're speculative, or sometimes they're just selling some options to take some time. But you have to do that with some risk management. And I think that's something that's key to this marketplace, is trying to add some value.
Well, I know if folks have questions, maybe they're in the cab of the tractor, got some time that they can make a phone call or whatnot. I know they can reach you guys there at agmarket.net very easily. How can they get a hold of you, Jacob?
Yeah, just look us up there on agmarket.net. Take a look at the About Us section. We can help you walk through some strategies, use the Profit Optimizer to look at some of the strategies that we talked about and show how that'll affect your bottom dollar.
I know as well, 844-4AgMarket. With that, Jacob Burks with agmarket.net. Thanks for joining us here today on Market Talk. Appreciate it. We'll talk to you again soon.
Hey, thanks for having me, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.